It's clear from the diagnosis of all the reports, the Draghi, the letter reports, that we have an investment gap. The agenda is very clear in terms of what we need to invest in, the digital transition, the energy transition, and modernizing our infrastructure. And they quantified in the hundreds of billions of euros of additional investment, and that investment needs to get financed through the capital markets, which is the minor part today. Only 25% of the financing in Europe, 75% comes from banks. So the banking side is hugely relevant. We need to push forward the capital market union so that the savings that Europe has, which are large, do not get channeled to other places, mostly to the US, but stay in Europe to invest in European projects. But while that comes, the banking union is essential. And as Letta says in his report, there's one whole chapter called Scale Matters. If you look at the size of banks in the world, among the top 25 largest banks by market cap, there are 0 EU banks. And there you have not only American banks, you have Chinese banks, Canadian banks, Australian banks, Singaporean banks, Indian banks.
This is the European mindset. The politicians and the regulators in Switzerland completely missed the Credit Suisse debacle. And then when they call in a white knight, UBS, Sergio Motti, he turns it round. He creates together a really big, powerful... Admittedly, it's very, very big compared to the Swiss economy. But suddenly they start worrying about it being too big, rather than saying, great, we've got a champion here as well. For me, that isn't just a Swiss mindset. That's a European politician mindset. So when you tell me they're beginning to understand, I question that.
I think they're beginning to understand all the talk in Davos has been around competitiveness, has been around the big role that the financial sector plays for Europe to be competitive.
There's no innovation without the money for it in Europe.
Exactly. You need the investment in innovation, but you need to invest also in infrastructure. We have huge infrastructure needs. You need to invest in the companies, in the SMEs. We just need to get our financial system to be more efficient in channeling the savings to productive investment, which is the big role that banks play. But really, believe me, Steve, I think they're coming to understand. And I think M&A is back on the table in Europe. I was telling you a few years ago it's boring because it takes a long time. You might remember.
Yes, I do.
Well, the point is that it might be boring, but it's essential that we gain scale. To compete in the world. Europe needs larger banks, like it needs larger companies in telecom, it needs larger companies in the tech industry and in other industries as well.
Where do you think we're going to see further consolidation in European banks?
The first step is always domestic consolidation, deals like the one that we're doing in Spain with the union with Sabadell, because there we have the beauty of diluting fixed costs in a larger cost base. We have significant cost synergies. And then the complementarity as well of having an SME business with a universal retail business and large corporates as well, which is where we excel. And then increasingly we will be seeing more cross-border. But for that, I believe that it's a bit of a chicken and egg. We need to advance into the banking union as well. Because today, cross-border deals have less synergies precisely because there are restrictions in how a pan-European bank can manage capital and liquidity primarily. So as long as there's ring fencing, for example, of capital and liquidity in member states, it just makes less sense to do a cross-border deal.